that going as well.
Okay.
So you're going to need to be multitasking. And I'll
You keep
try
me
to
on my
take over
toes. I
you.
haven't done that in a long time.
Yeah, I know. Um, anyway, folks, I hope everybody had a good end of the year. Hopefully you're not in a extreme lockdown. I was in the great state of Texas for a couple weeks, and they didn't know anything about COVID there, or so it would appear. It was interesting. We'll see if I'm just waiting for a couple things to happen over on this side, and I am going to show you guys something kind of cool, and I can't believe I never showed it to you before, especially for the PX users. So I'm going to bring up Portfolio Expert over here, and I have a lot of custom pages that I've developed. But one of the things that I want to show you here is there's you can add a web browser right into Portfolio Expert. And I'm just going to put vpm2 dot, oops. I'll put the vpm2.vpm partners in here, and you're going to see Wavetech is right there. And you can double click on that, and you don't have to go back and forth to a browser. You've got it all built right inside of within there. So if you're using that this way, I don't know why how many of you, Wayne, did you know you could do that?
Yeah, Bob, yeah, I did know. I haven't set it up yet, but yeah, I usually have my Wavetech screen and PE screen just separately.
Yeah. I just find it easy because you can just double click on this thing and it's, full screen. I think, yeah, you can blow it up. You can do all the magic on there that you can do in any browser. It's an old built-in browser, so if you try to run some things, it might not run, but it'll run most everything that you need. Some of the HTML5 fancy stuff won't, but this is for using Wavetech, and especially if you want some of the research pages and some of the other elements that come in on this thing, that's important that you can see. Let me just see how the YouTube is getting set up. Make sure folks over there are seeing and hearing.
Yeah, I was just going to say something. Yeah, right now it's the Wavetech with the Kendall Report logo screen.
Yeah, that's what should be there.
Okay. Well, because I know there's normally a delay. I was waiting, but I wasn't sure.
No, it's there. Okay. Hey, Brett B. We should catch up over on. So let me know that. Yeah. So let me put that over here on full screen, and so you guys can see that over on YouTube, and we'll get this whole meeting kicked off here in a minute. I'm going to go just for a second. It's a few minutes late. I'm sorry. I had a couple things. I guess this is what happens when you go out of town and get out of rhythm. Right as I tried to start the meeting, I was getting errors. I had to reboot with 12 minutes to go. Yeah. Yeah, you guys over should be seeing Portfolio Expert with Wavetech embedded in it. These are both products. So make sure, let me know on YouTube that you're seeing that. Then we're going to kick off this meeting.
Yeah, I'm able to see it really good on YouTube.
Bless you, whoever that was.
No, Scott. Yeah, it's very clear.
Okay, awesome. All right, so a couple things I want to do since we're at the beginning of the new year, and I'm going to bring me over to this screen here, so at least you can be able to see a little bit of me on the YouTube while I'm talking here. But the goal of today, I want to kind of restart. What's the great reset, right? That's what we're dealing with. Well, I want to do the same thing with a lot of the users on Wavetech, and I'm going to integrate some things here with Portfolio Expert. Generally speaking, I really want to bring in the fundamental concepts and things that are this product is going to do. Now we're starting off a new year, like I said, the markets are rallying again. You know, it looked like they were going to try to sell them off early, and somebody said, no, wait a minute, we got to buy. So I think, you know, some of the things that you know, that we've seen happen last year are continuing to happen. Wayne and I were chatting just a side chat a few minutes ago about what we're seeing. We are seeing quite a bit. We saw a lot of selling come in to the models on a short-term basis, and one of the things that I'll be talking about on the videos every night when I cover the database, and we won't see this will happen over the next couple of weeks, but last year in January we were seeing the same type of activity. If you recall, we came in last year at an all-time new high. We were pretty much right where we are right now, so we're seeing a similar setup a year later. It's kind of eerie, actually, but we're also starting to see some short-term selling coming in, and over the next couple of weeks what we're going to watch for is whether or not we get any intermediate selling coming in the models. And so that will be key to understanding as far as, you know, whether we're going to see this thing start to roll over. I love the comments, you know, on the channel. You know, I just mentioned the possibility of a top. We had to close lower today. That's not going to happen. But the whole, just saying that, everybody's going up forever, you know. Well, it's not going up forever, and there will be some point in hesitation. And one of the main things I want to cover in talking about using this tool, using this product to help you manage your portfolios, and which what I say every night on the videos, is to actually bring in some real fundamental understanding of walking this thing forward. And I'm going to do part of the presentation. I'm telling you, we're going to try to keep this to 90 minutes going forward. We're not going to have any marathon 5-hour presentations like we've had in the past, and we appreciate it's fun hanging out, but this year's I've got a lot on my plate as the year's starting off, and we from a corporate internal viewpoint and just personal, all kinds of stuff that is going to be happening at some stage. We'll have some announcements. It's all good, by the way. So but anyway, so what I want to focus on today is just kind of resetting our mentality. Last year was a great year for speculating, you know, buying the dips, doing all that stuff. And I announced probably in September, October, that the easy money was over. And there was still some easy money in some select stocks, but for the most part, it's going to get harder and harder to make money. And maybe I'll bring it up. The Warren Buffett portfolio I built last May finished up, I think, 102% on the year. So it really never was able to make any traction beyond that first blast off from May to, I think it was October or so. So it just kind of, it kept trying to get in and grind, and it's doing the same thing. But what I want to talk about is when you're running these portfolios, you're building a process. I just want to just bring everybody back to ground zero on utilizing this product, because I want this to be a really successful year for everyone that utilizes this product. Now we've got institutional clients, a lot of folks coming in on the retail side, and we're greatly appreciative of everyone. But it's good to understand that the purpose for this strategy, for this software, for what we do, is actually to build a portfolio. I was talking to, and I don't know if he's on or not. I don't know if Stuart is on. He said he might show up, but I was talking to Stuart earlier. Yeah, we were talking about it earlier, and it's like, it's fun speculating. We were both expressing our frustration on the markets and doing SQs and trying to catch a little sell signal here and there. But when it comes to the end, what really makes life easy is running a portfolio and running multiple symbols in one environment and trading. And some of the things that I'm going to talk to you about here in the next half hour or so is really talking about the fundamentals of the structure. And as we go through this year, last year was kind of random. We brought everybody in. we're scrambling to put things together. We're going to get a better focus on walking you forward and using this product as we go forward. I think that's going to be really important. I am working on a webinar for Portfolio Expert, which will bring you into the world of multivariant trading, a lot of things, and this is going to be, I think, really impactful for a lot of people this year. Our goal is to, actually, my primary goal is to bring in people that are managing their own money, that have a certain level of capital, that they want to manage their own money, 401k, retirement money, or just your taxable money that you have out there is what I really want to focus on this year. But actually running portfolios, not speculating in the market. There's a different thing. And when what Stuart and I were talking about earlier, it makes it so, life is so much easier running a portfolio and responding to the changes that the software is going to tell you to change. It's going to do everything. And those of you already on this call, there's some folks that maybe are familiar with the product, but basically it's going to tell you when to buy and sell, how much to buy and sell, risk balancing, everything's going to happen. So if this market starts to roll over at some point, we're going to start seeing cash. Now, we're already seeing some minor selling. We're still in a very positive place, but depending on the type of selections that you made, you're going to see some selling on a short-term basis right now. We're still on an intermediate term basis. We're still around 70, I think it's around 75, there it is, 77, 78% long. So that means 8 out of 10 stocks, basically symbols in our database, are actually long right now. So it's a bit frothy. There's still some duration issues and things like that. I cover that on the channel every night. But one of the things that is really going to be important, I think, for this year is to be able to customize your environment. You can, Jay's built a lot of portfolios. We have a stuff that we put out that are pre-built that you can use. But what we really want to talk about today is what kind of time is it going to take you to do this? And the point of the software, and this is what I'll get to my final point here, was to automate the process. So once you do initial build, and we're going to talk in some detail about this today, but once you do your initial build, you get your constituent list, now you go to phase 2, which is maintenance and doing the trades. And what I want people to get away from is micromanaging. Instead of taking, we've done a lot of presentations over the last, 8 months, talking about, how to build the portfolios and looking at individual signals. And a lot of folks get way too deep into the woods on the micromanaging every trade. And that's why you want to build a portfolio with probably a minimum of 10 to 15 stocks or symbols. They could be ETFs if you so desired. I don't think there's a lot of money in ETFs, but there's things that you're going to be able to build in these equity strategies. And typically we try to get everyone to ultimately work toward a 20 stock environment. And now that we have fractional shares and other things available and actually no cost trading, it's very simple for an individual or for anyone to do any strategy you can come up with, because you don't have to buy a full share. I'd stay away from junk stocks like Berkshire and Berkshire Hathaway is actually a mutual fund. It's really not a stock. And everybody knows I'm not a fan of Buffett, okay? But the theories behind the Buffett investing and all of that, there's some great fundamental ideas and stock selections there, but that's not what Warren Buffett does, right? He's a conglomerate of large and very large companies for the most part, the Santa Fe Pacifics and the railroads and all this stuff. So he's playing a different picture. So what we're able to do as individuals is actually start to build these customized environments. And one of the things that we've talked to you a lot about is building a couple different things. You can use stuff that we built Jay's very big on themes and doing those things, and I'm fine with the themes. We also have, and I'm going to bring this up here in a minute, but we have our stock screens that are available. In fact, we just run the new stock screens for January. I think they were run yesterday. Isn't that right, Jay? Anyway, I'm sure he's listening. But yeah, I think we've run that yesterday. And what that's going to do is give you a whole new selection process. So we have themes. You can come up with a theme. You can come up with your favorite stocks and things you like to watch that you think are going to move. You can use somebody's newsletter that you might want to look. I've done some crazy, silly things as like the top 10, like you Google the top 10 stocks that you want to own in 2021. Well, let's say that story had it all wrong. Well, and those stocks all go down. The beauty of this process is you're not going to own those. You're going to be out of most of those stocks that don't work. What you want to find is stocks that are going to work, and that's why we provide the screening service and all that kind of stuff. So it's really important to decide what type of strategy you want to walk forward, whether you want to use a pre-built strategy that's in Wavetech. They're also in the Portfolio Expert platform. Whatever you decide to do, if you want to build your own, there's a lot of elements that we put out there, and we're going to make sure as we go forward in the next several weeks, and I plan on doing some more videos on structuring and building those things. And even if you're not a Portfolio Expert user, I would suggest that you go out and actually watch the videos on Portfolio Expert on portfolioexpert.com, and that's Portfolio Expert with no E. So it's Portfolio and then X and then PERT.com. And you can go there and support, and you can watch all the training videos and things that are there. And I would watch the Portfolio Expert. There's a lot to be learned, even if you're a Wavetech user, from concepts and things that are going on in the software. And the software is very robust, and so that's mainly what we want you to focus on. I have a presentation with a PowerPoint that I'm going to be offering sometime in the next couple of weeks that'll be talking about multivariant trading, and that is one of the big things that I'm into right now is this dynamic indexing. So excuse me 1 second if you would. Nice. Hang on 1 second here. I got something going on the screen here. I lost my controls. They went away again. Here we go. Okay. I had a unique experience in being in a lot of cedar trees, and I'm allergic to cedar, so I'm getting a minor attack here. But anyway, I just want to set this up as we start today, is understanding the philosophies and basic concepts. And we've had the opportunity to interact with a lot of you, and we hear people like, oh, I don't have time to, they've canceled their account. Well, I don't have time to do it. Wavetech, the point of Wavetech is to automate your investing. So to say that is to say I don't have time to make money. And it really should be pretty simple. Once you build these portfolios, there's monthly and weekly type things that you have to do to maintain the strategies, or you can let us do it and pick one that we've already done, and you put orders in once a week, or maybe you check every day, and it takes you 5 or 10 minutes to run a very dynamic portfolio. And one of the things that's going to be really important, because this market will roll over one day, is having a sell discipline and getting the cash and protecting your assets. So that's the whole spiel I do every night on the videos is this, know how, basically know how to hold them and know when to fold them. The old Kenny Rogers song is, that's what we've always done really well. Last year, it was amazing that we were selling in January and early February, and then the daily models kicked in 3 days after the lows, and we were able to participate in that rally like mania. I talked to one of our institutional clients the other day, and they're up 140% on some of their strategies. I'm like, man, you're going to have a lot to maintain expectations for your clients for coming into 2021. But I expect plenty of volatility and plenty of activity in these accounts, so it's going to be important. So I have on the screen here Portfolio Expert, and one of the things I did is I used the internal web browser, and so I can go in and let me get me off the screen over here, but I can go in and use this product within Portfolio Expert. So if there's some things that are in Expert that are not in the in Portfolio Expert, so that's important to understand. So a couple other things that I want to talk about, and I'm going to bring up PX here in a second, because what I'm going to do today is just kind of covering the fundamentals, resetting everybody's mentality, going from the trading mentality back into portfolio management. And this will be the beginning of a series of talks that we're going to do to really get folks centered. We've got quite a few of you that have come on board with us, and it's important for us to maintain expectations, show you how to use the product, show you how to manage, do what I say every night on the videos, manage your portfolios and protect your wealth. That is what I've been doing for a very long time. But as we go into Portfolio Expert and we look at at Portfolio Expert and Wavetech, we're on Wavetech here, there's a lot of elements there that you're going to be able to use, and most of you, I know this is kind of a review talk, but it's also one where I want to make sure that we are having an understanding of what this product is going to do. I believe this product for this year is really going to have more. I believe at some point during this year there's going to be a protection strategy that's going to come in. And that is going to be probably the most important thing when this market does roll over, to have that protection. It certainly was last year, and the short-term models and that spike B bottom that we had, did we get 2 in a row? I don't know. We're sitting here at all-time highs. I still have higher projections on the from the technical viewpoint, and we're really not, the daily videos that I do are going to cover anything that happens there. And tomorrow's live stream I'm planning on doing is I'm going through every market. I'm basically using it as outlook, at least for the first quarter and maybe beyond, on what my expectations are for the year. I spent a lot of time this last weekend just going through charts, but from the product, you want to build a strategy around things that are maybe important to you, theme-based. Maybe you want to, I'm also got half of a 2-series video done. I took Kathy Woods at ARC and just shredded her and made her strategy so much better than she can ever dream of being. We basically just came close to doubling the output of what she did in her ETFs with no fees. Okay, so, and she's transparent. That's okay. That's who she wants to be. That's her philosophy. She's very open source. Everything that you're looking at, our software runs open source software. So I get how it works. I'm on board, but she wants to be transparent. She's given us the opportunity to really do some amazing things. When the market rolls over, by the way, all of Kathy's ETFs will get crushed. If you rebuild them how we're going to show you, probably next week, we'll probably, when I get this video out, I'm going to show you, there's an interview she did, and I'm going to I've done this, I've got one video done where I'm interacting with what she's saying, how we view the same thing that she's saying, and how we interact with that, and how we can actually do those things better. And this is one of the things that I want to show you folks. If you have ETFs or anything that you like, mutual funds, doesn't matter. There's some great managers out there, but we can actually take and make them better. And most of them are willing to tell us, at least in a lagging viewpoint, what their constituent lists are and those type of things. So they're giving us the opportunity. There's the bell. That's a real bell, the famous bell. But those are the things that I want to be able to do, and I'll have that video out hopefully in the next couple of days. I've got most of it done. And so you'll get an opportunity to see that. I think, like I said, it's two-part video. First is the setup, the philosophies and all that. The second one is the rebuilding. I think I'm going to call it the rebuilding of the Ark. And it's pretty fascinating, and it's going to be using the multivariant trading, all of that. And you can take and do this with anything. Jay's built, he actually shredded some was clean energy ETFs, and those things have done amazing. We just took some of the best elements of them, and this was done quite some time ago, and just walked them forward. So there's a lot of opportunity with this product for you to do two things: is one, to rebuild, make things better, and also have downside protection, because ultimately when this thing rolls over, this product is going to spit it out and put you into cash, and you're going to be preserving your capital. And we've done this for over 20 years, and this is exactly how the markets are. I guess they're always going to be going through these cycles, and that's exactly what I'm expecting to see this year. But building these products, building portfolios, and following the instructions that you're going to get through the software will be key, and not micromanaging all of those things. So I think, Jay, are you around?
Yes, I'm here.
Yeah, okay. So do you have your stuff ready to show, or?
Yeah, I do. I actually shared it with you.
Okay. Did you share it with the Kindle report account?
Yes, I did. Yes,
Okay.
Kindle report.
Let's just see if he's.
When you brought it up, I was looking at which account it was.
Okay.
So I was able to.
All right.
I put 6 on there. Yeah, the 2020 look back.
Yeah, so I think I can give you control. So what Jay's going to do, he's going to talk about some things that were constructed last year. And I'll set it up just so I want him to show things that we built right in front of your eyes as we did these training last year, how they performed since they trained. And one of the most important things that, and this goes to what I'm talking about today, is it's important for you folks to understand that when you build something, you have to believe in the process to walk it forward. If you're going to question everything that comes out of this, you're never, if you love the back test, you can't get forward thinking if you don't follow what it's telling you to do going forward. And this is what Jay's going to show you is he did the back test, and this is what we're going to show you is the walk forward of the back test. And this was the belief in the system and all that stuff. Jay, let me see if I can figure out how to get you control.
Okay. Yeah, we got.
I may end up being your eyes and your mouse for you.
It might be. We've got this thing backwired pretty good.
Yeah, we do. That's a good way to put it, I think. Let's see here.
I mean, if not, I can just kind of talk about it as you show. But
yeah, I'm looking at what we got going here. We got a cluster going pretty good. So why don't you just tell me which one you want to click on, and you can talk about it.
I'm afraid the whole show would just shut down if we tried to.
Yeah, exactly. I don't want. That's probably right. And it's not worth the risk, is it?
No, it's not. But, well, what I want to do is we could talk first about the very first one on the list, COVID Crusader 2020, and the theory behind that. And this was based on actually 3 different portfolios that I had built years and years before, and those other portfolios were a little more focused on 1 or 2 different sectors and type of things. So out of 3 of them, they were covering several of the sectors. And when when this year was going on and when COVID hit and the markets were just going down, I thought it kind of put me in my place. Not that even a really good portfolio is going to have its downtime as well, but my portfolios had done really well. Even in some of the '08 stuff in the back testing, they had done well, but clearly COVID was a whole nother creature altogether. And what I had done was most of my portfolios were down a decent amount, more than I would have liked them to. They were still up more than a lot of other portfolios, but what I had noticed was there were 3 portfolios that were either just below negative by, let's say, not even 5%. I think some were like 2 or 3% negative, and there were actually a few that were just positive. And actually, one was what I call general store, and it was just all the basic items that everybody needs. Everyone's going to go to the store, and actually, that's maybe why it went up, was all the panic buying at Walmart and Target and all those places kind of helped drive some of those stocks up. So a lot of whether it's food items or just any kind of basic necessities, Johnson & Johnson, that kind of stuff. But what I noticed was that yes, those were actually doing fairly good. And what I did was I started looking at the best performers out of each of those 3 portfolios, and that's where I got the idea for COVID Crusader. Is let's see how it does in that environment. And from the get-go, it was showing really strong promise. And as you can see, it just really did well with the pandemic going on. And a lot of it is just core companies that everybody is going to have a use for. And on this one, yeah, it is a larger portfolio with about 27 symbols, and I did start it with $250,000 $250,000 starting equity. And it also has I went with the daily weekly mix. That was another thing, and we kind of gone over this last few months. You'll hear we were saying that this has been a year of the 2020 was the year of the daily model, but normally I was doing strictly weekly modeling in previous portfolios. So that was one of the changes when I did work on those 3 portfolios and creating this new one. Was I went ahead and just let the system pick out of both daily and both weekly models which one was going to perform the best. So we got a really nice mix. And yeah, as you can see, and this is just going off of, I started this actually in April of this year. So yeah, it was actually, yeah, we went back a month. So I started in May, and so we back tested. We just went back to April 1st. So April 1st, if you had $250, you're already up to $415,000.
So what portfolio am I supposed to be on?
You had it, yeah. COVID Crusader 2020.
Okay, because that started in February. Okay.
I was looking at. Oh, yeah.
Okay.
Yeah, I looked at the wrong one.
Do I have the wrong
list.
one?
No. So that was me. I was looking on my spreadsheet, my notes. That's correct. Yeah, that was actually the very first one I built. So it's actually I built that one in March, and I went back to about middle of January middle of February, because it was middle of March when I developed that one. Because that was already about a month into the market's downturn. So, and when you do look at that. March, as I actually was building it, that was a low month, but after that, as the market was starting to recover, it participated really well. And
sorry, I did something, and all of a sudden, other things are going on. I guess I gotta do the crazy. I gotta pop the Runa. That's that.
Oh, that's the Runa. I haven't heard that sound in a while. Got the Runa going. Did you have any Runas on your trip at all?
Of course, I brought a case of them. So
there you go. You can never be too far from the Runa. But what I was showing was this portfolio is a little more well-rounded. It does cover several different sectors. So I know on this one's diversity, and the idea maybe on this one is not that it's turning out to be a good higher performing portfolio, but on this one the concept wasn't that we were just going like a rocket ship and just always going up and making a bunch of money, but it was something that is steady and can weather some of those storms of when the market is hitting the rough times, and that you're going to have some kind of stability and not have to worry about it as much. And that was the concept behind this one, was maybe it won't have some of the highs of the other portfolios, and the lows, you're not going to have as many lows.
Well, let's take a look at some of these others.
Yes. Because I also, I did, you'll see the one below, it's Quantum Crusader, COVID Crusader Quantum. I know it's a little bit of a tongue twister, but this one was narrowing it down for portfolios that are starting out with just a little bit of money. And on this one, I went with 50,000 as a start, but I took about the 8 best performing out of COVID Crusader and then put them in this one just for portfolios that are just running a smaller amount of equity. So even in $50,000, and actually this one was started a little later. So this came about a month after I had built COVID Crusader, because some clients were like, I like it, but I'd like to have something a little smaller with a few symbols, and that's how I came up with this one. And this was kind of a little more of a rocket ship, but there's a few more daily models.
November was the big concert. 27% in November.
Yeah, that was the big month. Yeah, that was.
So let me just add some things in here, and why Jay and I talked about what we're going to cover today. And one of the things I wanted you to see when he put these stocks in, guess what? He didn't have any clue how this stuff was going to play out. It could have been different. This just happens to be really good, but it was because of the year that we had. I mean, you had the NASDAQ up, 43% on the year, and most of these are NASDAQ stocks that are in here. Not all of them, but I think most of them probably are. But the point is that this is what I was saying earlier. I'm just going to kind of tag team it with Jay here, because this is what I was talking about earlier. Believing in the process is really, it's one of the hardest things to do, but it's the thing that you have to do to be successful with the product. And, I've told investment advisors for years, and for them, this is a disaster, what I'm about to say, in their mind, is the worst thing that's going to happen is you're going to underperform. And to them, that's their whole life, is trying to at least perform or outperform the S&P. From an individual standpoint, the only thing I want to do is get my money to grow. I don't have to answer to anyone but myself. And this is really important, to be able to walk this forward. And there's some videos that I put together way back. Matter of fact, I was watching a little bit of our 2010 conference video just about a couple hours ago, looking for some ideas on a presentation that I did. And man, was I a lot younger. So I look pretty damn good. But the whole point of everything we're doing is that was the concept that I was talking about in this video, was that you have to be able to walk this thing forward, and you have a maintenance strategy. And we've spent a lot of times in other previous presentations talking to you about how to maintain these things. So you ask the hard questions every month and every quarter. How am I doing? How am I doing relative to the markets? Are the stocks that I've selected, are they participating on what's going on in the world? And, so when you look at, if you've ever looked at Morningstar and they rate mutual funds, they go from a 5-star, which is the best, to a 1-star. And it's really based on performance, right? So the 1-star, I've always said, same thing with like Value Line, if you're familiar with that service. It's an old service. But, you want to figure out how to buy the 1s and 2s, not the 5s. And, if you can figure out how to buy 1s and 2s and then watch the 2 become a 5, that's what you really want. I've always said you want to buy value stocks that turn into growth. That's really what you're trying to do. You're trying to find like a GARP, growth at a reasonable price, but you want that company to come alive. And this is what Jay was talking about in the COVID portfolio that we're just talking about, is that you're really getting that stuff to actually, it turned out that all the food, like, what was it, the grocery theme that you had, Jay?
Yeah, general store was my grocery.
Okay, yeah. So general store, here's all the stuff this is the stuff you're going to have to buy to stay alive. And it turns out that's what everybody was buying. So that's why the portfolio did so well. But this is the same thing. I had one of my institutional clients when we've used a company called Fiverr for outsourcing some of our tech stuff and things that we've done, some web environments, other things that we've done from and when Fiverr was coming out, I told this guy, I said, you need to buy this stock. This is going to be a good stock. Well, it came out. He bought it at 25. It's now 200. So it ended up to be a 10 bagger basically. And he goes, you got any more of those? And I've always been good at figuring out some of the themes and what's coming. And part of what I'm going to start tomorrow is start building that theme out on this great reset and the things that are likely going to be even put in front of us or shoved down our throat as we go forward. We'll find out which, or injected in our arm, the way life is looking at the moment. So, but there's a lot of things that we're going to need to look at, and there's going to be ways to play. And I've said this before, politics matter, taxation matters, so you need to look at who's going to be there's going to be a lot of winners and losers picked going forward. And our job is to figure out who's going to be the winners. And even if we get it wrong, I go back to my comment about the top 10, like Googling top 10 stocks to own in 2021. Well, that sounds like a stupid idea, and it's just a clickbait piece, right? But you can take those stocks and put them in and walk them forward. I've been doing that for years. Every year, it's my favorite game. I'll build a 20 stock or a 10 stock portfolio off a couple Google searches and see how they do. And some of the stocks do amazingly well. Some don't do very well. The good news is we're trend followers. We're quants. We're going to participate in the ones that work. And those portfolios have always done reasonably good. There's actually some good stock picks. So I'm just telling you, it doesn't matter how you come up with them. But you ultimately come as you go forward is maintaining, asking hard questions on this, like a portfolio like this that's up literally up 140% since the build. This happened to be, and Jay's concepts that he came up with happened to be in the sweet spot of what was going on out there. He's actually very clairvoyant, right, Jay?
Yes, I see things that I don't even know I see.
Yeah. So, but it's the theme base. It's what do you think's going to happen with the markets? All of these thoughts are fine to have, and in fact, many of you have like some really good insight. And you also know, if you've been playing around with stocks for a while, that, what's the famous thing that everybody said? It's the woulda, coulda, shoulda story, right? It's like, well, I knew that I was talking to a buddy about that 6 months ago. I knew that. I had a conversation with a guy the other day. Said, well, stick it in the system, and if it buys it, follow it, because you get a sell discipline. You have a way to actually take those ideas and harvest some money out of those things. And that's the important part about having a product like this on your desktop. That's the point of it, actually. So, Jay, did you want to review maybe one more for a minute?
Yeah, actually, two more. I'll make this brief, but yeah, two more. Two of them are actually they're in the same concept. Both of the small block. The small block Hemikuda, if you can show small block Trans Am 350, but they're
where's it at? Small block.
Oh, I may not have. I thought I had shared that one with you. We can just show the Hemikuda. They're both the same. I thought I'd shared the small block with you, the Trans Am, but yeah, basically the idea behind both the small block Hemikuda and the Trans Am 350 is small block is kind of an acronym for small cap companies, and all I did, it was very simple. I used our stock screens, and what I did was I had searched for the small cap companies and just started playing around with combinations and seeing which ones are higher performers and putting them together and seeing which combinations worked. And I got this list, and on this particular for Hemi-Cuda, it's actually a daily mix. So both of them are on the daily models, but for Hemi-Cuda is actually a mix of both the 1.2 and 3.2. And with the Trans Am portfolio, that was actually hyper-tuned with just using the daily 1.2 model. So it was definitely a little more aggressive, or actually a lot more aggressive.
So what you're trying to say, you put a supercharger on it?
I did. Yes, I did. Yeah, I definitely put a supercharger on it. It was pretty cool. But
Yeah, so one of the things Jay's talking, go ahead, Jay, finish your thought now.
but yeah, so for that one, I just kind of wanted to display that one as showing how easy it is, even using some of our different stock screens, as you know, the way they're laid out. And yeah, if you scroll to the right a little bit, just to show like the different cap, you know, the way it's listed, it's really clear.
Yeah, I'm just trying to get to the bottom here.
Yeah.
It's doing weird shit on this.
And on some of them, the one I really like is the magic formula value. I go to that category quite often, but what I did, I grabbed a lot of the small cap companies and started playing around with them. But it was just kind of showing you how easy it is with our stock screeners to, you know, select stocks out of those. And, you know, with a little bit of effort, you know, it's a lot easier than trying to just go through a whole database or other.
Can you use a dartboard?
Yeah, you can use a dartboard. Just let's see what hits. Well, with these lists, you almost could use a dartboard, and you're still going to come out with something decent.
Yeah, no, this has always been a good screen.
Yeah, so yeah, just to the right on the column, you'll see the LC, MC, SC. So that's to your right. But yeah, it's all the large cap companies, small cap. And I went through and on the magic formula section, grabbed the small cap companies, and you know, just went from that and then saw what I got, see what I come up with. And some weren't as high as others. And when I got the highest ones, I believe on that one it might be 17 symbols that I put in that one. Because on Hemi-Cuda, that one is actually, it started at the equity is 100,000 now, and I will share it with you so you can show it. But the Trans Am 350. All I did was started that with $20,000, so I will need to share that real quick so that you can see.
So you made 36% since August. Well, it's not quite that, a little less, because you technically started this in August. But the point of, like I said, why I wanted Jay to actually cover this stuff is that you're going to build something and you're going to have no idea how it's going to work. And these are good examples. This isn't the rocket ship of 140% returns, but it's a solid returns. Anybody, you know, I talked to one of our long-term investment advisors, and they use mostly ETFs yesterday. I talked to them, and you know, they're thrilled. They're up 23% on a year like last year. He goes, Bob, we're thrilled. That's all they want. 20% is a good year, you know. And so 36 is good, and 140 is ridiculous. Okay, so, but that's the point of at least having this ability, which to protect these assets, is we are going to need to protect at some stage. It's just, I don't know how high is high, but there will be a point, and it'll be a lot of fun. Not only will there be a lot of money to be made on the way up if it continues, but there'll also be plenty of money to save or make when the markets turn around from a trading standpoint. But from the modeling viewpoint, all we're trying to do here is stair step the equity higher. I think I'm just trying to think of a matter of fact, I'm just going to go over to, I did have a PowerPoint here, but let me go over to something here, and let's just bring up an expert chart here. But yeah, so really all you want to do with these things is you just want to stair step these. When this particular strategy is flat, it means it's in cash. You just don't want, you want to eliminate the downside, so you flatten it off, and in the end, all you're looking to do is build stair steps. So now we're at this peak where we're at right now. It's an all-time new high for this strategy. At some point, we want to build another stair step up here. We just don't want to give back any major money. And you can go back, I'm not sure how far. Yeah, so this strategy goes back to 2003, and it's been stair stepping forward since then, you know, for what, 17 years. And when you do this, it eliminates all, you know, that anxiety. And that's something that is really important to make sure that you have that protective strategy. So, you know, you stair stepped your money from, I guess this was $100,000 to $1 million over 17 years. Not too shabby, but
Not at all. That's nice.
And the point, it's a 10-bagger, and I actually had, I wish he was still around, old Frank Savetic. His claim to fame from 1974 to 1980 when I met him, he's one of my old mentors and very close friends, turned every $10,000 in an account that he had. He was a broker, turned into $1 million. And he built long-term relationships with a lot of people then, because most of them had much more than 10,000. So literally, you know, I know of one particular guy that he made almost $25 million in that 8-year period. So there's, you know, and this was 1980 dollars. Okay, so these are real money. But what you want to do here is you want to be able to stair step the equity forward. You don't want to, you know, I guess the goal is to not have any previous equity curve drop below the previous low. So if you look at this thing overall, you if we put up like an S&P 500, it's a mismatch. But if you notice, we know this 2002's low was taken out by 2008, and now the volatility is, you don't want to see that lower low actually go. And it's funny, way over on the bottom of the screen is the 1987 crash. Doesn't look as dramatic as it felt, because I lived through that. That was a 44% drop in the markets in 3 days. So it looks like a little blip and on this scale, but it's much bigger than that. If I go and grab this, you can see there's what it looks like. So, but yeah, so anyway, yeah, I'll go back to your stuff, Jay.
Okay, and I shared Trans Am with you, so it should be back on there. Let's see. Yeah, right up there. Yep, right
Yep.
under Hemikuda. There you go. And on this one, I started with it's the same concept as Hemikuda, just I started with $20,000 versus $100,000, and so in just a few months' time, you've already you're up 50% just in however many months, about 6-7 months or something. But on that one, it's all strictly the daily 1.2 models, and and it would work. Clearly, it'd work better if you had more money into it. But because it is running 14 stocks in that portfolio. So normally, $20,000 won't be enough. But I wanted to show that you are still capable of doing something in a short amount of time, even with a smaller amount of equity.
Well, Jay, you always forget about fractional shares. You could do this with $2,000.
I know.
He hasn't grasped the concept yet.
I still haven't. I still haven't done that. One of these years, maybe 50 years from now. Oh, yeah, that fractional share they kept talking about.
Yep. So, yeah. So anyway, but yeah, that's yeah. So you can actually do this with any amount of money as long as you have a fractional share ability, and I've got some interesting things working that hopefully we'll be able to build orders and that you can put into some of these platforms very easily to be able to do this. So,
and I just had one last one that I was going to cover, and then I was good with that.
okay. Which one?
Yeah, so it's actually Wicked Ninja.
Wicked
Yeah, that one
Ninja.
right there.
Okay.
Yeah. So actually, in that short amount of time, that was pretty much the best performing one that I had out of the ones that I was displaying for today's show.
So from minus 20% really, because May is when you technically built this. Is that right?
Yes, correct. Yes.
Yeah. So you got only 186% return.
Yes.
What's in this buzzard?
Okay, so it is similar to the idea with the small block Hemi-Cuda and Trans Am. It's not focused on just small cap companies, but it was also, again, I used our stock screener, but it wasn't just relegated to Magic Formula. What I actually did with this was grabbing companies that had shown up in at least 2 different sections of our stock screener. So that's kind of an interesting idea, is to go through and find some that are used duplicate, because they're meeting a lot more of the criteria than just what's set up for each individual section. And I'm actually working on one kind of called the stock screen all-stars, and I'm testing out that concept early this year. I'll start working on that. But yeah, on that one, it's just, again, I started with $20,000, but this one is running strictly all daily 1.2 models, and I didn't just force them into using daily 1.2. I had a fairly good list that I'm making some other portfolios out of, but what I did was I took a bigger list. I think it's about 40 or 45 symbols, and what I was trying to do is find the stocks that the system, the optimized trading system was daily 1.2, and so I wasn't forcing any issues. I wasn't just trying to, okay, I want only daily, tell me what's better, daily 1.2 or 3.2. I said, okay, out of all 4, the daily and weekly, which system is optimized. And so on that's where I whittled this down to 11 symbols. It's strictly out of all 4 trade systems, that daily 1.2 is the optimized model. And so and also on this one reason, like my Ninja series that I've been working on, and this actually goes back many years, is on Ninja, it's very aggressive and everything, and kind of like how the name Ninja is. And what it is it's got a really high allocation factor. So it's not something for the faint of heart, or it's not something to be, play around with going real high. But on this one, it works. So it's got a higher than normal allocation factor, let's say.
Yeah, I actually watched a short documentary on Bruce Lee the other day. It was very interesting. So maybe you better have a Bruce Lee series.
I think I will. Some people have been doing YouTube Bruce Lee Jedi Knight, and it is awesome. So
Yeah.
There's some cool things but that was a documentary, but it was taking some clips from like I think it's called Enter the Jedi is what they call it.
That's funny, instead of Enter the Dragon. That's pretty
Enter the Dragon. But and real quick, what some clients I've been helping out with emails, and it is a good thing to bring this up now that we're in the new year and everything, is it is actually Bob, if you agree with me, please let me know. If not, let me know either way. Time to kind of go through and review for the new year, review your portfolios and go through and see. And I was suggesting using the watch list, which I believe is the easiest way to go about it, but see if the trade systems have changed for optimization, because even as I was working on getting these portfolios done for the presentation today, when I was working on it yesterday, I had noticed that some of the optimization, the models had changed on the optimization.
Yeah, so that's actually a really good point. And the issue that we have with the Wavetechers, you're not going to be able to change that model, turn off one model, turn on the other one. You can in Portfolio Expert, but you're not going to be able to do that. So I had a guy, I just want to address this real quick. There's someone on YouTube want to know purchase. I just want to show you, this is where you go, portfolioexpert.com, but the best place to actually learn about the product is to go over here. I just want to show them. We got, you go to kendallreport.com/Wavetech, and that will get you to this page. There's a video, and tells you all about everything that you need to know. So that's pretty much what you want to do, and all that. So, but yeah, so the Wavetech tool is $97 a month, and it's prorated $3.18 a day. There's no trial on that. There is a trial on the higher end product, but it's all out there. So thanks for asking. And somebody said, hey, it's good you're back. It's good to be back for that. Is the market going to crash tomorrow? Who knows? I've been doing training. Yeah, so Wavetech, I actually am the architect and the creator of the models. Everything was built. I do have IT people that built this. I don't know how to program, but I know all the other stuff. Actually, so okay, let's see here. All right, Jay. So does that cover everything? So let's open up to some. Let's open up to some questions that since we covered a lot of stuff in the Zoom room, we got about, it looks like 50 plus. So if you folks have some questions, I want to bring that up, and then we can kind of close this down as we come in. We got about 15 more minutes. We're running over a little bit, but that's okay.
Hi Bob, it's Wayne.
Hey Wayne.
You mentioned about the optimization since the models have reran for the 12-month period. So basically, I suppose what we should do is just go back through every stock in our portfolio and just check that.
Yeah, so here's a consideration. This is going to be a big year. You can see, probably can get this off a video since I covered the database every night if I have this on screen. And Michael, you're still on. And the reason why I'm asking is I know he's keeping a lot of these records. I don't know if he's still on or not. But one of the things that you have in the research area here, let me get this off screen. When you go to all stats, over on the far right-hand side, the models were, yeah, this is interesting, on a weekly are still not, it doesn't appear, this map should be updated, but these represent, this doesn't reflect the exact change here because there's so many symbols. If you notice, there's 31,000 symbols. This includes all the symbols that have been delisted that have been in the system over the last 20 years. I actually talked to IT guy the other day, and we're still working on this data cleanup, and ultimately we're going to have this map reflect just out of this 16,000. But it's 50-50. But my guess is because of that the 1.2 model is probably going to be switched. Wayne, is that what you saw? Is it went maybe a 3.2 to a 1.2? Is that what you were seeing?
Yeah. And what I was also wondering, if I go into my portfolio and change a 1.2 daily to a 3.2 daily, how's that's probably going to affect it, right?
Well, the way you can do that on Expert, you can do that. You can actually go in and you would stop. So two things you need to look at is, do they both still have open positions currently? And if they do, then what you can do is literally, let's say you would go in and put a stop date for today, and then you would start, then you'd put let's say it was 3.2, you'd put a stop on 3.2, and it's now 1.2, you could actually switch it over. You put the same symbol again, only you make sure that you put it under 1.2 when you're adding the symbol. You know how to do that?
Yeah, that makes total sense, yeah.
Yeah, and then you start it for that next day, and it will generate a signal because it's already got a long, and so it'll swap it out. Then you can go forward if you want to stay with the optimized model. But one of the reasons why I usually suggest that you don't worry about that until the trade comes off, and then when you add it, and then if you want to go back in and add, you can put that same symbol. You can actually put it under optimized daily, and it's going to pick up the right model after the trade that you're in. So there's no real need necessarily to flop the trade. I don't really know that we've ever tracked that type of action, so I don't have a high level of context to be able to talk to that point. But I think if you're in a 3-2 trade and it's working well, leave it on 3-2, let it take you out, turn it off, and then if you want to put that symbol back in under the new optimized model, then you can do that. But I'd wait. Theoretically, I think I'd wait for the exit before I did that.
Okay, thanks, Bob.
Yeah, I see, Colin, I see your comment. Yeah, that's one of the things we're trying to clean out in the report builder. There is some things that come out that are not relevant, but you can sort the column. You'll see anything that's in yellow are symbols that the data is no longer valid. And the reason why they're in there, and that's what we're going to be reviewing, is seeing what symbols actually have that are in current portfolios, because what happens is if somebody has an old symbol and they've turned it off in a portfolio, if we take it out, it will screw up the performance of an old portfolio. So we have to run a SQL query, make sure that nobody has those symbols in historic portfolios, and make sure that that user is still valid, and a couple other things. But yeah, so you can sort by last trade and get all the relevant trades right there. So if you haven't tried that, then that's something to do. And, you know, and from a standpoint of I guess, of just looking at that, Colin, yeah, there should be like a yellow, right next to last trade. There should be let's see if we can bring one up. Yeah, let's just see if we can bring one up. So this is a good question for everybody here. But if we go to, hopefully I can get a query, get one with a bunch of symbols. Here's a big one. Yeah, so you see the yellow symbols, Colin, right here. These are last trade date. You can sort by last trade date. If you click it, you should have these green little marks there. That'll show you that those are all live, have data. And it shows that the last data date will be yesterday's data right now to the server's update. So that's the only reason why these symbols, you can say they haven't traded, like I'm just randomly picking one here. MKTW hasn't traded since 2005, 1/21/2005. So 15 years ago. And that, yeah, so that those things happen, but you can click on this last trade date and that will clean up, at least get put it to the top. And then if you want, you can go over here and you should be able to export that to Excel if you want, if you're digging into those symbols.
Bob,
Yeah.
that's for expert, not Wavetech, right?
That is for expert, not Wavetech, correct.
Okay,
In the query tool, you're probably not going to see that in, this thing just has a lot more in depth. Yeah. All right. Yeah, so let's get a couple more questions. I'd like to. Somebody's got something, right?
One of the guys, Stylesky, is asking, can IWM be added to the market grid?
Oh, yeah, market grid. Yeah, so what's being worked on in the background is that it's all going to be in Portfolio Expert soon, on every symbol. That's the plan anyway. but yeah, I'll see what I can do with that. I think I had it in there. We had a lot of issues with the market grid blowing up. And just for reference, anybody watching market grid, if you don't see SPX.x in there, you see INX, then somehow the wrong symbol, I ran the wrong file. So that's a user error. In fact, I'm going to delete that one that's got that. Make a note to myself to do that. But that's definitely something we need to do. But yeah, that's yeah, I'll see what I can do. Was that YouTube or Zoom, Jay?
That was on Zoom.
Okay.
On the chat.
Okay. Anything else that we should address?
I was starting to answer. Ed Force was asking if there's a way I can do basic beginner training on the Zoom meetings once a week, and I know, you know, we're trying to figure out how to do some of that stuff, but I do, if Ed's hearing us, that is some of the stuff we normally do. I will cover some of the basic stuff early in the show, and then we go on to some of the more.
Yeah, so what the plan is, Jay, and I haven't told you about this, is we're going to do videos. We need to just have a video to get started. We need a better video onboarding series, and that's kind of something I've got on a list of things. I have lists. See, I have lists.
Lots of lists. There's
I have
one
lists.
of them.
But yeah, so yeah, so that's what we need to do on that, and we'll make sure that gets done. Jay's been digging into some videos. Maybe we can find where we covered the basic onboarding stuff. The videos that I have on the website, and the gentleman that was asking about the Wavetech videos, yeah, so all you have to do is go to Portfolio Expert and go under here, under support, and here's the Wavetech Training. If you have whoever asked that, Jay, have you watched these videos? That would be the thing that you want to make sure you do. So you can click on this and go through it and watch all the videos here.
You'll come to a home page, which you'll...
So it'll take you through the basics of getting things done. And then, you, as I mentioned earlier, you can also go in, and I would go to Portfolio University, and you'll learn a lot actually from going to this Portfolio Expert Beginner series as well. And you'll be able to take a look at, but there's things here on research overview. There's things that I talk about in this series as well. But the plan is to actually have the real plan is we're looking at a product called Walk Me. And what it does is when you do a mouse over and you click, the first time you do it, it tells you what to do, and it also has a video that will play alongside. It actually embeds into the website. So we're looking at some of that technology as well, just to help walk you through as you're there. So literally you can turn off the suggestions or have them on. So I've actually contacted, right before I went on break, I contacted folks there to try to do that. Yeah, so Colin's asking about the ER relevance, and the ER is important. ER stands for effectiveness ratio. So you want to make sure that it's greater than 100 minimum. That will tell you a lot. As Michael, and we always call him Mikhail, so we know who we're talking about. Are you still on?
I'm going to check. I know he was there earlier.
Yeah, I know. He's incredibly quiet. But yeah, so Colin, what we're looking at is he came up with some very interesting concepts of combining all four models on a symbol and coming up with a composite. But basically, you want to make sure that you go with typically the best ER ratio, which comes up, and when you go into the research area here, there's a bar that I'll just grab anything here just to go there. but at the top of every symbol, all 16,369 of them, there is a little ER rating. This one tells you it's good. You want this to be at least in the good to excellent area. This one happens to be a 133 rating, so that's just something I just grabbed real quick. And what that tells you is the standard for it is that you're 50% of the time you're right. So I'll explain the whole deal and how I've always tried to tell people accuracy is an illusion. Accuracy is as important as how well you hold them and fold them. So you'll see symbols that have a 40%, maybe they're 40, even in the high 30% range of accuracy. But what you'll see is some big risk reward numbers. So I'll show you on here, and this is where it's being calculated from. Is the ER ratio is 133, but the average win is 13% on this symbol. This is the index, one of our internal indexes, but the percent loss is 5. So it's actually got an average win-loss ratio of 2.5, and that gets multiplied against the percent win. Where's it at here? That gets that's your percent win-loss, and then your win-loss ratio is 2.56, and that gets multiplied by the percent winners, 51, and that's where it's going to come up with that 113 number. So the standard is that you 50% of the time you're right. You make $2 for every dollar that you lose, and what that ends up doing is getting you. So the way that the trade would break down is if you did 10 trades, you'd make $2 on 5 trades, so you'd have $10. You lost $1 on 5 trades, you end up $5 to the better, and that's how it always has worked. I've spent a lot of years on trading floors, and you're always watching that win-loss ratio. You can go down if that ratio's 2.5, 3 to 1. You can be 30% of the time and make money. You can only be right 3 times out of 10. And as we always point out, in baseball, you go to Hall of Fame for batting 300. And the way in this world, if you're batting 300, you've got to be basically hitting triples. You got to have a 3 to 1 ratio against your losers, and that's what that ER always tells you what the ratio is, at least at 100. So that's important. You'll see some really big ones, especially in some of these new IPOs that are out, because a lot of times we'll get a signal right out of the block on an IPO, and it'll have this big gain. So sometimes those ERs can get skewed a bit by 1 or 2 large trades, and typically you want to make sure the symbol that you're looking at has at least, I would say, 10 or more trades to normalize that ER ratio. Yeah, and yeah, so Colin actually, while I was doing that, actually said, yeah, some ERs are ridiculously high. And one of the things that I'm planning on in the future is that we're going to have like a look back, like a 2-year, what have you done for me lately, kind of look back on that. So that would be the way that we would take a look at that, so you can just see the most recent ER versus the historical. And right now, all you have options on is the historical.
So I have a question regarding the ER ratio portfolio.
Yeah.
And so I created a multivariant portfolio. I noticed that actually the monthlies were doing better than everything else in the last few months, which is interesting. But in looking at the ER ratio portfolio, I see that for the monthlies, there's a lot of them, probably about half of them, that have 100 ER ratio. And I'm assuming it's because there wasn't, because these same stocks have significantly higher ER ratio symbols for the same stock. And I'm assuming it's because during the portfolio period when it was active, it didn't trade more than once.
That's probably exactly what happened.
Okay.
Yeah, if you're
All right.
looking at the ERs within the portfolio, yes, that's probably what's happening. It's just those trades. Yeah, so it's interesting watching the monthlies, and that's why I have a PowerPoint I was just looking at that I'm going to use to do a presentation here in the next couple of weeks, just talking about the multivariant being, and the beauty of multivariant trading, so you use the monthly, weekly, daily, you can go all the way down. What Jay and I found for the most part is that daily, monthly, daily, weekly are usually what you want to go, but sometimes weekly, monthly, and sometimes you can do all three, right? And that'll happen. So, but what happens with being able to trade the same symbol three different ways. So you're trading one on a daily chart, one on a weekly, and one on a monthly. It also satisfies something else, an anxiety of even being, if you're out, you got that short-term signal to kick you back in, and if you're in, you get maybe a partial sell of a position. It makes you lower your anxiety. At least you took some profits on one or something like that, because watching some of these longer-term trends, they can build a lot of anxiety. We've certainly seen that over the years as people go in there.
In doing this, it looks to me like when I put in my set of symbols, there's about 20 symbols. It looks like it evenly divided let's say if I had a single model instead of the multivariant, it might have allocated 60,000 to that symbol. But when I take the same set of symbols and put them in as multivariant, it looks like it allocates approximately 20K per symbol,
Right.
per model.
Right. It probably did, and then what will happen though is as you go down the road inside that portfolio environment is you'll see some dynamics happen. It may be because it's fairly new. It may be, I don't know how far back you set that, John.
5-year.
Yeah. Okay. Yeah. So typically that's what you want. You want to split up that same trade, that same $60,000 trade three ways. And now sometimes you're going to have 40,000, sometimes you have 20, maybe the monthly stays on, and sometimes you're going to have zero in it, as you go forward. And that's the beauty of that is if the symbols that you're putting into the models are, trying to find the best way to put this, are like, let's say it's stocks like, you can find, I saw a comment by somebody like the Tesla Army guy, right? So the Tesla Army guy wants to do monthly, weekly, daily, because he wants that monthly symbol to stay on. So he always owns some of Tesla. And when it's strong in an intermediate trend, he'll own 2/3 of the position. And then on the short term, he's going to be in and out of full on to most of the time until a long-term signal comes out. That's going to keep them in. So if you have a lot of longer-term ideas, those are really good, or companies that you feel are players in the economy going forward, that's going to be important as well, I think.
Now, is the system, when you have three models on one symbol, is it going to be, it's essentially like taking that 20K in my example and trading it with, just that 20K gets buys and sells from the daily symbol, and then I'll get another set of buys and sells from the weekly symbol for that same, or
Right.
weekly model for that same symbol.
Right.
Okay.
Yeah, and then what the dynamics that will happen, let's say you got 20 symbols in there, right? You may end up being out of that altogether, and that money gets allocated to some, inside the portfolio gets allocated over to another set of stocks, right? And then all of a sudden that same stock goes, hey, I need some money. I got an idea here. I want to buy it short term. And so you're going to get it. You're going to see, that's where you'll see those reallocation and that profit harvesting stuff start to happen. So it'll sell out pieces of maybe a bunch of stock to raise money to buy that one if you've used all your cash. So it's going to use your cash first, then it's going to go, hey, I don't have enough money. I need more. So it's going to figure out what that allocation is going to sell down those other symbols.
Okay, great, thank you.
So what time's dinner? We're never going to let you live that one down. Okay.
Well, I'm on the West Coast, so
It's gonna be a while yet. We'll
Yeah,
have
it's
to
a
carry
little
this on
early
for
for
another
dinner,
few
huh?
hours.
It's only 2 o'clock.
I usually eat at 9 p.m. at night, so.
I think
Yes.
he was just having a snack that one night, right? We were starting to bore him. It was carrying on like the
Yeah.
fourth hour.
Easily bored.
John's like, "Come on, man, I want to go. I got things to do."
These are my snacks, dark chocolate. That's,
There you go.
like, I buy that stuff by the buckets, and not very much sugar in it, mostly dark chocolate. Anyway, any other questions? Yeah,
Yeah, Bob, it's Wayne again. Just going back to John's question. So if you had a daily 3.2 and a daily 1.2, would the system, when it did the reallocation sell, would probably sell down the daily 1.2 first when it did the reallocation sell?
not necessarily. So what's going to determine what symbol it's going to sell is the largest allocation of that lot. So let's say you have 20 symbols on, and one of the symbols was originally, I'm making this up, of course, was at 2.1%, which was the largest holding. It's going to sell that symbol down, non-related to any of the other three that might be, if you have 3 models on one symbol. So what it's going to go, I need money. We built this thing in, what we called it at the time was top slicing. I have some friends in London that I used to trade with. They always go, just top slice it, mate. Just take it down, Like, okay. So we did that. And so what we did was the largest position in the portfolio gets I need to rewind. So it looks at all the symbols that you have currently. And then let's say if there's more ideas, it's going to do a linear calculation going, if I put all 20 of these symbols, what's the allocation factor? It's going to develop that allocation factor. It's going to look at cash. How much cash do I have? So let's just say, let's make that a 4% number, right? So I've got 2% in cash, so it grabs the 2% cash, and then it goes and looks at the list of the current holdings and says which one has the largest position that's grown. So originally it was 4, you got something that's 4.3, another one's 4.2. It'll just sell enough shares to raise the cash of whatever it's selling to buy that new idea. Okay, so the way it discriminates is who's got the biggest position, and the theory behind it is that the largest position in the portfolio represents the most risk to that portfolio. If the market rolls over, it's going to have, that symbol's likely to have the most impact. Not always, but that's the philosophy behind it. So that's why we go to the largest allocation in the portfolio, cut that back, and then we will get that to go back to the linear calculation to add the new ideas in. And does that make sense?
Yeah, that makes sense. Thank you
Okay.
for that. I was always wanting to understand that. Thanks, Bob.
Yeah. So, and that's where we end up naming this dynamic profit harvesting, because that's what it's doing. So it's taking typically those symbols that, just to kind of one more comment on that, typically those symbols that have grown like that we're taking money off the top as well. So especially if it's sometimes we'll have symbols that have doubled in value, and maybe it was originally a 2% allocation, it's grown to 4 something, and we need 5%. Well, and the new allocation factor is 2.2. It's going to sell that position that's 4.5% right down to 2.2. So we got half of the money there, and then we'll start working down the list of the basically the top performers. We're going to chop them off at the top. We're going to keep them and then reallocate them. And a famous story from 2000 in the dot-com era was Qualcomm, and we had this the all-time, and I have to look. I think it might have stood the test of time. Is the all-time return for a portfolio with money, and it may not stand right now, but was 179% in I believe it was 1999, and during the dot-com, and so, but Qualcomm was in as part of that, was basically a dot-com strategy where it was just Qualcomm and AOL and all the stuff that was around during that time. And Qualcomm got sold 5 times. It started off at $35 a share. Qualcomm went to, I think, $800 or $900 a share during that period of time, and it was sold down 5 times, and the ultimate average out was around $585 a share, and it started at 35. But all of the monies it kept getting cut in half. It would grow from 2 to 4, it'd get back to 2, it'd go back to 4. And meanwhile, we're grabbing these big chunks of money and putting them in other stocks that are going crazy. And it pyramided the capital to equal 179% return. So that's exactly what the effect is, especially in like some of the portfolios Jay showed today. That's the kind of dynamics that is happening all the time. From that standpoint, is you're getting this profit harvesting and reinvesting and shuffling of the deck all the time.
Thanks.
All right, one question, and we're going to call it. We just can't get off this darn thing, can we?
That's just too much fun. Everyone's having
I
too
know.
much fun. keep going on and share stories and talk.
So
I
I
think-
have a follow-on question to what you're just talking about. When you have reallocation orders on a multivariant model on Friday, you have both weekly and daily in that portfolio. Will PX sell a weekly model of a single symbol in order to buy a daily model of the same symbol? Will it ever redistribute across
Potentially,
models?
yeah. Potentially.
Okay.
Yeah, it doesn't discriminate. The only thing, the discrimination is how big is that? If it's the largest position, absolutely. So, which is also, if it's growing and you're on this weekly model, the thing about all of the models that I developed, my joke was, it's always everything it does is on the right side. So if someone thinks, so it's always right. No, on the right side. So otherwise the top comes, and then when the top completes, we're going to sell on the right side when it starts to decline. On the bottom, it's going to bottom, and we're going to buy on that right shoulder somewhere when it's starting to bottom. So we're not trying to pick the top or the bottom, but what's interesting, you'll see some of these reallocation trades will come in right at the tops. It's amazing. It's like we would have never sold that from a modeling viewpoint looking at a trend, but we did sell it because of an allocation. And that's kind of where I've come up with this joke recently, is that Dave and I, we accidentally put peanut butter and chocolate together and got a Reese's cup. That's what happened. We mixed. We were trying to solve an issue of having too many ideas for the money we had, and we ended up developing this profit harvesting situation. And so that was the unexpected part of what we did and what we got out of that. So we got a Reese's peanut. No one thought that chocolate and peanut butter would be that good together.
So I know you said one more question, but I need to know if this is something I should bug Jay about. I'm trying to migrate from Wavetech into PX and use a multivariant portfolio. So I just go in there and add the symbols again, and and say for a different model, will it take monies from my existing Wavetech portfolio for one symbol and do that split we just talked about? Or do I need to do something?
Yeah,
manual?
so, all right, so we take a Wavetech that's on a weekly only, right? Or daily,
Yeah.
and we're gonna make it multivariant. So what's gonna happen is you're gonna put some, it doesn't matter what the capital, you're gonna build a back test, right? And you'll put those models in there. And so what it's going to do, it's going to tell you what the new allocations are in Portfolio Expert. So it's gonna say, let's say you originally had 4% in Wavetech. Now you're gonna get 1.3 and, you know, the daily model, and, you know, it's gonna split that piece up depending on the allocation, how that comes out. It's gonna split that trade into 3 different segments. And so what you'll have to do mechanically to make that happen is just figure out the dollar amounts or the percentages, and then you'll just have to add those other 2 positions into your brokerage account, you know, what that total is. And so that's the, so the total might come out to be very similar to the same, actually.
But if I had that one symbol with 60K in Wavetech and I bring it into the multivariant, it would split it into something like 20K each
Yeah,
for me.
right.
Okay. Okay.
It should come up with something like that. Yeah, exactly. Yeah, it should. Yeah, because yeah, and then all you have to do is whatever that total amount is, that's what you're out. So, like I said, whatever you had in Wavetech, you'll get a new amount. Maybe it'll be similar, maybe it'll be slightly different, probably be the same, very close to the same if all 3 models are long. You might only have 2 models long, so you might end up downsizing.
And that all happens just by cloning the Wavetech portfolio and then using that clone portfolio and going in and in the modification of that portfolio, I'm going to add the same set of symbols
Yep.
again for other models that I'm interested
It should do it. I just keep, you've got the original, and if it looks really weird, reach out to us. We'll take a look at it. But it should work that way. That's how it should work. And that's the easiest way to clone that portfolio in PX and get it to go from there. That's probably the best way to go.
Okay, great, thank you.
Mm-hmm.
Yeah, I was gonna say, John, we're gonna start charging you per question now.
Yeah.
No, just giving you a hard time. No, he's always got good questions.
No,
We're
he
always
does.
helping
He
him out.
does. No, it's good stuff.
And it helps everybody at some point. So.
Yeah, so yeah, I think that's the from the standpoint of migrating, that should work. So let us know how that, if you're doing that, let us know what it looks like.
I definitely will.
When the
Jay
dust
will-
settles, let us know, because it should be pretty funny.
Yeah, I'm not shy about reaching out for help. Jay can testify to that, so.
Oh yeah. I do testify to that. Real quick while I'm on the call here, Bob, can you go over just to the virtual portfolio manager? We were getting a couple questions on the Zoom chat on showing where do you find the orders for the portfolios?
Oh, okay. So we got to find, here's one with orders, Nifty 50 adaptive. So let's say this is a customized screen. Let me get a couple things off here and see if I can get this out here. See, I have a custom screen. I'm trying to get rid of this stupid thing up here. Hang on. My goodness. All right, where we go? There we go. All right. I usually have it cleaned up pretty good. So your orders are going to be under portfolio orders here. So if I click on down here, down at the bottom, but because this is a customized page, if I go to portfolios over here, if you don't see something where it says like this, here's a good example actually. Oh, here's portfolio orders over here, over on the far right on the screen. So sometimes you might not have that on there. So let's say I'm going to delete it. And if you don't see the orders, what you it should be there on the page, but you can go to show view, and then what you can do here is you can look at different things that you want on there. So you can just literally go up there. I think it's under.
Scroll up a little bit.
Yeah,
You had it
it's
right
up.
there and then it went down.
Yeah,
There
yeah.
it is.
So portfolio orders right here. I'm just going to click on that. I'm going to hit OK, and it comes over here. But if I don't like it there on PX, I can drag it over here, and I can resize all this stuff, right? So I can make this screen here. So now when I click on portfolio orders, I don't like how that's laid out. So I'm going to get more radical here. And I'm going to grab my open positions. I'm going to put it up there. I hate where that is, so I'm going to put that up here. So now what I've got in my, I've got even a further mess. So
No.
yeah, so but you can take and customize all this stuff. So I'm just gonna, I want to drop all this stuff into one window, so I can just click through it, and this thing's going to remember that I did this. So
And if
now
you can show that when you're done, show that in Wavetech as well.
yeah, so so now I've got my trade profile, I've got my orders right here, I've got my I've got all my annual returns, but I can add other stuff here. So you always you want to look if you want to add some other elements here. If I want things for individual symbols, this is charts, different types of things that I want to have here. And I believe this is all covered in the online manual that's there as well. There's quite a bit of stuff. And the good and bad of this product is you can customize everything. So if I decided I don't even want this expert chart here, I can throw it up in this thing up here. And then I go, you know what? I want that to be, I want to split that screen. So I can do anything with this stuff I want just by grabbing that tab and pulling it around and switching it. So when I log out, it's going to, the other thing that this product does when you're using PX, it remembers the last thing you did. So when you come back in, it's going to bring you right back to square one of what you did. And I've got so many different profiles that I've saved. It's somewhat ridiculous on all the different profiles I have. But I also have a lot of customized pages that I can flip over to as well. So I have, customized research pages, things that I've put up there, all the elements that I want, and I just save them. So ultimately, you can have things situated the way that you want them to look, and that's the goal. So yeah. What was that on Wavetech? You want me to bring that up?
Yeah, bring up Wavetech and show everyone where the orders are right there so they can see.
I don't know if I have anything. Here we go. Like
Yeah, so yeah, for the clients when you're looking at when you're going to check, and real quick for the new clients that are out there watching for the first or second time, the way the models work, if you're on the daily models, at the end of each day when the nightly download occurs, the system is going to look for the daily models. It's going to actually look at the day's activities and see if action should be taken, whether a sell is been triggered or a buy, or if it's holding the current position, whether it's flat or in a position. And that happens on a nightly basis for the next morning's open. And on the weekly models, it's going to only happen on Friday. So the weekly model is going to let the whole week play out. And then on Friday night's download, it's going to look at the whole week's activity for each symbol and then determine whether a buy, hold, or sell is called for. And that will issue Friday night or during the weekend for Monday's open.
Yeah,
And
so I brought up this portfolio, and there were 2 orders here, and if I go to the orders button there on Wavetech, it will bring it up. There's 2 sell orders here. Selling MGM and Win Resorts.
And then, so it also shows, the shares that are involved, and
Right.
so it'll let you know exactly everything you need.
Yeah, so what it's projecting is sell everything. So this is a liquidation order.
Oh, yeah, because this isn't like a reallocation.
Correct. Yeah, so it's just, so it's all right there for you. Here's another one with 4 orders down here.
Yeah, you got 4 down there.
So I can just go over here, go to orders. They're all sells. Looks
Oh, there you
familiar, right, Wayne?
Sorry, I missed that one, sorry.
Oh, no, yes, yeah. Wake up, man. It's early in the morning. No, I was saying these portfolios all have daily sells in them.
Yeah.
Yeah, so,
Yeah.
yeah, so, but that's the kind of stuff that you're seeing in rotation. So it went from 86% invested to 62% on the open this morning. And I guess if we were to bring up, we could see how, I don't know what these stocks did. If they opened higher, that's a good thing. You can get a better order. But so it's just, these orders that we're selling here are Chipotle, Germain, so just liquidated out of those. So what's happening in this environment is that you're actually coming back. And Troy, I was wondering when you're going to come back from in your spaceship there. Your sound's off, I think. Yeah. Anyway, yeah. So, but yeah, that's where they are.
I'm here, Bob. How you doing? Happy New Year.
Good, Happy New Year. Yeah, I was watching as the spaceship was empty. The captain was gone.
No, I was just making some food, but I was listening to you on my phone on my headphones. So.
Yeah, it's pretty funny. Yeah, I actually went and looked at that set, and you're right. That's your place looks just like that. So anyway, all right, folks. I think we're going to call it quit. Unless somebody's got something, you got to have an answer. We're gonna bolt. Troy's making me hungry. Thinking In-N-Out Burger here.
I just made a filet mignon steak. with some
Oh
pasta.
man, see that's very rude of you.
I'm sorry.
Stuart's shaking his head. Yep.
I'm so sorry.
Yeah, that's not fair, Troy.
You could have told us it was a hamburger. You didn't have to go that deep on that one.
I'm sorry.
Yeah, just say it was chopped steak or something.
Yeah. Ground round or something. All right. Well, yeah, folks, thanks for coming today. Happy New Year to everyone. Looking forward to making some money this year. I don't know if we're going to make money by protecting money or if we're going to make money by the old-fashioned way when the market's just going to keep going up, So, yeah, so we're almost at the reopen of the futures, but did they sell off? Yeah, a little bit. So you're up, you're still up a little bit here. So, yeah, gold had closed above RXT weekly today. It's kind of interesting.
Oh, Bob, I want to let you know something. I am officially in the green now, or in the black. I don't know what the term is, but whatever I lost last year since using Wavetech, I think I'm up like a few percentage points actually. So
That's awesome.
yeah.
Yeah, because that wasn't pretty, was it?
No. I was pretty depressed.
Congratulations.
That was pretty sad.
Congratulations. That's a nice, fast comeback.
Yep. I'm eating filet mignon now. My life is good. My girlfriend's not mad at me. You know, things are good.
That's hilarious. Yeah, yeah. It actually can't get much better than that, can it?
Yeah, I guess. I mean, my girlfriend wants me to buy her all this Alexander McQueen shit now, but whatever.
That is really funny.
But that's the perfect testimonial for
Yeah,
what
there
we
you
do
go.
here. Turn it around quick. It doesn't matter how bad.
Yeah, 'cause I remember our conversation when you first came on, so that's pretty awesome.
Yeah, I got my money's worth. I'm here.
All right, man, that's good.
Could be worse, Troy. You could be married to.
When's that big event you were telling me about?
Oh, for my friend that works at Interactive,
Yeah.
his wedding is on October. I think the second weekend of October.
Oh, 'cause it's down the road a ways.
Yeah. He's coming back from London because his parents live actually in Westchester, New York, and I'm close. So he's getting married here in New York. So
Okay.
I don't have to go anywhere.
Oh, that's cool. Very cool. All right, Wayne, good seeing you, man. Happy New Year.
Yeah, good to see you.
Everybody else, John, appreciate it.
Happy New Year, Stuart. Just seeing you.
You too, Troy.
All right.
Happy New Year, everybody.
Yeah.
Happy New Year, everyone.
Happy New Year. Thanks.
Happy New Year, everybody.
Happy New Year's.
Yes, Happy
Yeah,
New
so-
Year. Thank you for joining today.
So, John, I don't know if anyone ever told you, but you look like Steve Bannon.
Bannon. I don't know if I want to take that as a compliment.
I don't know what you can take it as. I'm just telling you what you're looking like.
Yeah, this is my COVID due. Yeah.
Yeah, but you guys can't even, you get shot if you walk out the door or something, right?
Hey, Bob, you're recording these meetings. Would you tell Robert where you're posting them?
Where my what?
Where I know you're recording these meetings. I just don't know if you're still posting them or not.
Yeah, Jay's got a couple where we've got some logistics issues we're going to work through here next day or so. And we're probably just going to put them up on YouTube is probably what we're going to do. So we'll get those out there. I think, Jay, you've honed a couple of those down, or at least one, right?
Yeah, I have one right now. We're just trying to figure out how to get it up there. But I have that and then two others that won't take as long. But yeah, I have the one ready to go, which was the important one with the transitioning, from your actual accounts and real money into how to use Wavetech.
Okay, yeah. So, so we'll get that out there. We'll pull this one down and crop it up a little bit so we get all of our chit chat out of the end and stuff like that. We were pretty focused today. So, yeah, no, it was, I think, a good session. The goals of in the next several weeks is more on multivariant modeling, more on just portfolio construction, because we need to build this thing. I think on the live stream tomorrow, I've got a lot of stuff that I'm working on. I'd almost rather not do a video tonight, but if I don't, everybody gets all nervous if I don't do a video every day. So, especially after being off for a couple of weeks. So, but yeah, tomorrow I would say come to the live stream. I'm going to try to cover everything. I don't know if I'll do the typical individual stock thing. I'm not sure how many rabbit holes I'm going to end up going down, but there's a lot to talk about right now.
Everyone you can find, Bob.
I'm sure, but and we'll have the results of theoretically. I guess there's still some results of elections from November that haven't been settled yet. So we'll have lots of results, and tomorrow's the 6th. There's a lot going on in DC tomorrow, and a lot going on other places around. So we'll see what kind of market reaction we get. But everybody must be feeling good. They were sure stampeded back in those stocks again today after yesterday's reversal. They just can't end. So anyway, all right, folks, have a great evening, and we'll talk to you, I guess, on my video tonight and tomorrow on the live stream.
What time tomorrow, Bob?
1:30.
New York time?
Yep.
Okay, perfect.
All right, man.
Thank you, Bob.
See you.
Bye.
Have a good night, everyone.
Hey, guys.
Bye.
Take care.
Thanks, bye-bye.
Cheers, everyone. See ya.
Later,
Good
Jay.
day.
Hey, Chi-Town Tony on YouTube. Are you a subscriber? Okay, it looks like you are. Okay, cool. Yeah, make sure, let us know if you're having any issues or anything you got going on. Appreciate it. Yeah, we'll get you, we'll get that Zoom link out as well. It takes a while to process this thing. Hey, Jay, make sure if you're hearing me that you turn off the Zoom because I can't. You need to close the meeting.